Yo, what's good, crypto degens? It's PB, back with another episode of Fat Bear Alpha on the first day of May. All right, strap in, because Bitcoin's finally done with its nap. After ranging for over a week like a lazy bear in hibernation, the king of crypto's roaring back, smashing through to 97K. The total crypto market cap's at 3 trillion, up a cheeky 3% from yesterday. The 24-hour trading volume's taken a bit of a breather, down 2.4% to 79 billion. Bitcoin's dominance is holding strong at 63.7%. The altcoin bros are probably sweating, praying for that mythical alt season, while Bitcoin keeps hogging the spotlight. And speaking of vibes, the fear and greed index is chilling at a neutral 51. For alt's performance, the winners are Virtuous Protocol, Beam, AI16Z, and AIXBT. The losers are Solaire, Alpaca Finance, PundiX, and Drift Protocol. It's time for macro news, because nothing screams fun like diving into the dumpster fire of economic data. U.S. construction spending unexpectedly fell by 0.5% in March, according to the Census Bureau. Economists were expecting a 0.2% increase, because apparently they're still huffing the hopium from 2024. Nope, the data said, hold my beer, and came in way below expectations, down from a revised 0.6% gain in February. Year over year, construction spending still up, but let's not throw a parade just yet. This drop is waving some red flags. Why the slump? Economists point the finger at a resurgence in mortgage rates, which is basically the Fed's way of saying, you thought you could afford a house? Higher rates are choking out home building, especially for single-family homes, because who can afford a 7% plus mortgage when avocado toast is already breaking the bank? Private construction projects took a hit, and public projects weren't exactly saving the day either. The only thing keeping this from being a total bloodbath is the acute housing shortage. Yep, there's still not enough homes to go around. This construction data screams economic slowdown, and when the real world's hurting, crypto doesn't exactly get a free pass. Next, I'm here to serve up the latest crypto scoop with a side of sarcasm. The Sky ecosystem, formerly known as Maker Dao, are back at it with a governance proposal to finally ditch MKR for Sky as their sole governance token. This is part of their endgame rebrand from 2024, because renaming everything wasn't confusing enough already. The proposal, dropped by their core governance squad, wants to make Sky token the one true king of the Sky protocol, complete with staking and USDS rewards for holders. Rune Christensen, Sky's co-founder, called it a huge milestone on the forums, probably while sipping a latte and dreaming of a world where rebrands don't tank token prices. If this passes, Sky takes over all governance duties. MKR gets phased out like a bad meme, and you'll be able to stake Sky to earn USDS, their shiny new stablecoin. MKR holders can swap at a fixed 1 MKR to 24,000 Sky rate, but there's a catch. Starting September 18th, conversions come with a 1% penalty, creeping up 1% every 3 months. It's like a convert now, or regret it later loyalty program. And governance authority shifts to a Sky-only contract between May 15th and 19th, pending a vote. No going back to MKR after that. Next story. Humanity Protocol is gearing up for Phase 2 of their testnet rollout, and it's all about scanning your palm to prove you're not a bot or an AI deepfake trying to scam your way into the blockchain. According to their updates, this phase involves a mobile app where users register their palm prints, followed by a palm vein scan, using specialized devices in Phase 3. Why palms? They claim it's less creepy than WorldCoin's iris scanning orb and harder to fake than fingerprints, with false acceptance rate of less than 0.00008%. Basically, your palm's vein patterns are as unique as your bad crypto investment decisions. The pitch is seductive, a decentralized privacy-first identity system on a ZK EVM Layer 2 blockchain, using zero-knowledge proofs to keep your data safe while verify you're a real human. Phase 2 lets you upload personal info, like education or employment history, to create verifiable credentials, all while keeping your data encrypted and under your control. They've already got 2.9 million users signed up, with 2 million human IDs created since their testnet launched in September 2024. And they're dangling RWT tokens and future HP token airdrops to sweeten the deal, especially if you spam your referral link. Last crypto story. Theoriq's been hyping their build and public campaign for their OLP Swarm, and they're now in the final stretch of Phase 2. This project's all about using AI agent swarms, think a hive of digital bees buzzing around Uniswap pools, to make liquidity provisioning smarter, faster, and less likely to get wrecked by impermanent loss. Phase 1 was about their observer and signal agents slurping up raw data from partners like Graph Protocol and Cookie.fun, turning it into clean, actionable signals. Now in Phase 2, they're leveling up with policy and LP agents, which sound like the kind of bots you'd hire to manage your portfolio. These policy agents are the brains, using 24-hour price ranges to predict volatility and decide how wide to set their liquidity positions. They can mint and close positions on-chain. Basically, they're out here opening and closing Uniswap trades like a crypto bro, but without the suspenders. The LP agents, meanwhile, are the muscle executing swaps on-chain and tweaking strategies in real time based on market vibes. Now, we're diving into the DeFi section with a hot story about SoonStack. The Soon crew got their Soon-based mainnet going live, marking another notch in their quest to sprinkle Solana Virtual Machine SVM on every Layer 1 blockchain out there. They've already got SVM chains running on Ethereum, BNB chain, and now Base, which is like watching a chef whip up the same killer dish in 3 different kitchens. The pitch? SoonStack is the only fully implemented SVM stack on the market, letting developers deploy apps once and beam them across chains like a sci-fi teleporter. No need for users to bridge funds or jump through hoops. Apps just work everywhere. Soon's basically pulling an Optimism or Movement, but with Solana's high-octane engine under the hood. Optimism hit a peak valuation of $4.7 billion, Movement clocked in $2.7 billion, and Soon's betting they can ride that same rocket. Their SVM BNB launch on BNB chain was a hit. Millions in on-chain volume in the first 72 hours. Even CZ himself tweeting about it like it's the hottest new meme coin. Developers can build once and deploy everywhere, reaching users wherever they're shilling their bags. Next story. Thrive Protocol has been making waves with a big bag of $100 million to fuel their mission of supercharging crypto ecosystems. They're not just sitting on that pile of cash like a dragon hoarding gold. They're actively reaching out to projects, waving grant applications like a carrot on a stick. Their Thrive Certified Challenge is the main event, offering funding for builders, developers, and DeFi degens who can prove their projects deliver real value. Think of it like a crypto Shark Tank, but instead of Mark Cuban, you've got Thrive's team of validators and their fancy on-chain attestation tech. Thrive's all about ROI-positive grants, meaning they only pay out when projects hit verifiable milestones. Think daily active users, transaction volume, or treasury contributions, that kind of thing. Builders can score up to $250,000 per project, while Guardians, fancy term for reviewers, earn between $15 to $500 per hour to vet applications. They've already flexed their muscle, funding 5.3x more grants than ApeCoin DAO with just 3% of their treasury, and 2.1x more than Arbitrum with 2% of theirs. Partnerships with heavyweights like Métis, Arbitrum, and Hedera with a 4M HBR fund in play show they're not messing around. Last DeFi story. Movement Network. The folks building a Move VM Layer 2 on Ethereum were supposed to drop up to 1 billion Move tokens, 10% of their max supply, through their MoveDrop program. This was their big community love letter, rewarding early users, developers, and degens who've been shilling Move on X like it's a cult chant. But today, they hit the brakes, announcing a delay due to an ongoing investigation into market maker abnormalities, governance changes, and a significant Sybil attack. That's a lot of words for simply not doing anything. This MoveDrop delay is a PR nightmare. Sybil attacks are real. Bots and fake accounts can drain airdrops like vultures, but failing to catch them after months of prep just screams amateur hour. And market maker abnormalities? Sounds like a polite way of saying someone's manipulating the books, but without details, it's just FUD fuel. The sentiment's grim, moves down 81% from its all-time high, with only $125 million TVL and a measly $1.44 million in DEX volume. Definitely not the shining example of success. Our airdrop guide today is about Napier Finance. Napier Finance, the DeFi yield trading protocol that's been hyping up their V2 bootstrap, got their Napier Points program running, promising to allocate 15% of the NPR token supply on TG. How do you get in on this? It's classic DeFi grind. Provide liquidity, curate PT, and YT markets, hold yield tokens, or trade on their platform. They've even got a shiny interface to track your points. The points get distributed weekly, so this is likely a long-term farm. Don't go all in with random markets. Start with the ones you find interesting and try to double farm projects whenever you can. That's all the alpha for today. Catch you next time, unless we're all farming points in a bear market by then.